let's turn our attention to the fun bits. The industry has been talking a lot about credit cards, and even just hearing myself say that, it kind of sounds ridiculous because credit cards are everywhere. I use my credit card multiple times a day. I use my business credit card multiple times a day. But, the instantiation of the modern neobank has always been prepaid cards. And we're starting to see a pretty dramatic shift towards higher end products that require a lot more organizational and operational maturity to run. We're seeing this in our business. We're seeing this in our personal lives. The Wealthsimple Visa Infinite card is my daily driver now. And there's one very interesting thing that they have done with that product that I'm not sure I should talk about, but maybe we just will anyways. And yeah, so you are the credit guy at Kinvey. You're the credit guy in Canada from a product perspective. Tell me what you're seeing.
Yeah, I mean, listen, despite my background, thanks for that. Not sure how true it is, but I'll take it. This has been happening all around us, I think, over the last couple of years. One thing for me that just kind of like nailed it home in the last couple of weeks is I got invited to a nice dinner with a global card manufacturing and fulfillment house. I don't know, they probably do or don't want to be named. Doesn't really matter. A name that everybody knows, and their CRO was there. As well as their head of Canada for card programs. And he just said, like, what's up with this shift? And I kind of immediately knew what he was talking about, but I was like, well, yeah, wow, this really puts it in perspective. And I'm like, what are you seeing? And he just said, a dramatic shift away from debit or prepaid card programs and new card program issuance towards credit. Whether that's secured, unsecured, charge cards, you name it. But a shift that he definitely felt was very, very acute. And after I kind of talked about it, we chatted for a while, it became clear and clear to me that that's an indirect reflection of the work that we've been seeing come across our desk. And it's not even just brand new businesses starting up card programs. I think that there's a lot of businesses that have had existing debit or prepaid programs out there that are starting to contemplate shifts towards a different product model as well. And I mean, I think that there's a lot of reasons for that.
Starting to contemplate is putting it very lightly. I mean, this is happening, right?
It is, yeah.
I built the prepaid program at Wealthsimple. And at the time, the gentleman who was leading a different business unit at Wealthsimple started to get involved on the banking side, which was really their sort of Cash App and this debit card program that they were building that I came in to help out with. And he was obsessed with the idea of getting to a credit card. And for Wealthsimple, it makes a ton of sense. And it's taken them this long to get there for good reason, because it's a very difficult thing to do. And it's a type 2 decision. Like once you walk through that door, it's really hard to go back because it's a very big investment of time and energy that is going to take years to mature to a point where it generates significant revenues consistently and safely. And now they have this product out here and it's great. Talk to me about credit cards as a product though, because we I think have this idea that credit cards are the first product you adopt because for the last 10, 20 years through, merchant point of sale. Like I remember getting a credit card at Future Shop to get a computer
Canadian
once.
Tire. That was when I was a kid. I got one at Canadian Tire first card.
Yeah, and Canadian Tire still, they have a banking license. They're issuing credit cards. Talk to me a little bit about, using credit cards to acquire customers versus using credit cards to cross-sell and deepen the engagement with existing customers.
Sure. So I think it would be helpful also just to talk about those challenges between the two a little bit, because I think it leads into, how it's different. I think that for most businesses who are thinking about adding a card program, over the last 10 plus years, prepaid, like what I actually mean is that they've got an established business, they've got customers that are using a core product. And as like any really strong, good business does, they're actually trying to innovate and disrupt their own business model because they know that over time, if they don't, somebody else will. So, meaning they're trying to think through new product ideas, cross-sell opportunities, a way to deepen the loyalty and engagement with their customers. And I think that prepaid for a long time has been this multi-purpose product that actually feels on the surface much less sophisticated and complicated to potentially build out for their clients. And I think in a lot of ways it has been. There's certainly less partners required for prepaid or debit than there is credit. I think that, a lot of people would look at credit and start to think, hey, I need a credit risk competency. Obviously, internally in my team, or if not internally, contracted out for an extended period of time to help us, build those initial models and then actually drive the business growth towards achieving those models. But I think that what time has told on some of the prepaid programs is that you actually need a deeper competency in an area that nobody's really thinking about, or it's been hidden on the surface. And that is making money on a very, very low margin business that unfortunately actually has to compete with credit cards, and credit cards that have deeper pockets as it comes to loyalty programs. And so you've got to be a master at building these programs on prepaid that are so unique and innovative that will drive a unique advantage versus a sea of competition out there. And I just think that there's been very, very few companies that have actually been able to make the numbers work on prepaid. And so, yeah, it's this challenge of it looks easier on the surface. We know that more people use credit cards than debit cards for transactions in Canada, and that transaction dollar amounts are higher on credit than they are debit. But it just felt a lot easier to get into. And so, on the flip side, one of the major differences with credit is that there's a different financial model behind it. And yes, there is a different type of sophistication that is definitely necessary. But, I think that there's more of an opportunity to build a long-term stable, business and growth model on the back of a credit card in today's market than anybody was really giving credit, or I guess there was this false assumption that prepaid or debit could deliver something similar. Does that make sense?
It does. I think it's worth hammering home the point that a card program is a card program. The difference between operating a prepaid card program versus a credit card program has nothing to do with the card, the network, the transaction processing. It only has to do with what you do with the message when you get it from the network. You get a message from the network that says this cardholder wants to spend this amount of money at this merchant, and here's the metadata so that you can do some risk analysis. Effectively, you're going to take that message and you're going to approve or decline it based on the customer's or the cardholder's available balance. That available balance can be cash that they have deposited and is sitting in an omnibus account, if you're a fintech, or it can be an extension of credit that has been predetermined and accepted by that cardholder. And so I think that's a very interesting point, which is the cost of operating the program itself, independent of credit decisioning and line assignment and collections and all of the things that are unique to a credit program as compared to a prepaid or debit program. The running of the technology to process the transactions is pretty much the exact same.
I think that's a really fair point.
So why not deliver a better product in the eyes of consumers with a better business model? And this is en masse, of course. You could argue pretty easily that, well, debit is X percentage of transaction volume in a given market, and younger people on the whole prefer debit products. But that's a bit misleading, right? Because I think most people listening to this today, given the demographics of our audience and our demographics, are using credit cards day to day.
Yeah. I think the other thing that it comes down to too, that is emerging, and we've obviously seen a lot of new entrants in the Canadian space, is those younger Canadians. I mean, prepaid definitely solves an important gap, right? They need to buy things online, and let's say they have not yet applied for a credit card, or they just don't have one yet. Being able to add a card to DoorDash and be able to order dinner is like a must-have, and that's completely clear. I think prepaid also has had this opportunity, and in some ways has delivered, depending on the business, on an experience that really can help customers, appropriately manage their spending better. Those who maybe are new to credit or just like haven't figured out how to manage credit yet. Canada obviously has an overspending problem, and I think that prepaid on the surface can help with that issue for sure. But where I was kind of going with this is that how far does that actually take those young consumers? It's not actually helping build their credit. And so at the end of the day, if you look at the trajectory of a young person in Canada, their goal and aspiration really still is to get into a credit product that is going to take them to that next level. And that's really functional in terms of, hey, I want to build credit. I want a mortgage one day. I have these goals in life. But then it's also aspirational in terms of vibes. I'm just going to call it vibes. I'm going to talk about social media. I'm going to talk about all of the influences around us. What's cool, what's hip, and what kind of brand and product do I actually want to associate myself with? And, I think some of those who have excelled in prepaid have actually done a good job at establishing that connection. But I think it's really hard to do. And depending on what your first product was as a fintech that you started with and what niche you're in, it can also be a harder leap to get over to a cool card and brand that I want to associate myself with. So, I think that's why secured card programs recently have seen a bit of a boom, just because it does create this lower barrier to entry for a customer to get a credit card to start building credit, and still earning the rewards. And so, I think that there's a whole new wave of innovative card models that really kind of sit in between debit and credit, that, have this potential to offer the best of both worlds. And, whether it's a standalone credit card or it's something in between, I think that we're going to continue to see this shift, because as more and more players start bringing this value prop to the market of improving your credit for young people, I just think that more and more innovation will be born on top of that. And I mean, I know that we're obviously working on a couple of interesting programs that I think will deliver on those needs, but others are going to be catching on as well.
Yeah, in a world where major banks have caught up on mobile experience from a utility perspective, from a usability perspective, certainly from a security perspective, prepaid becomes fleeting. If you deliver a prepaid card to a user 6-7 years ago, and alongside that, cardholder is getting a better mobile banking experience than they would have otherwise, and some additional functionality that aligns with their day-to-day spending habits, maybe better than a bank would have at the time. Maybe there's bill splitting, maybe it's P2P. Who knows? But my point being is that prepaid was a way to extend that experience in a way that those customers needed. Payments is solved from the perspective of can I use the money that is stored in this fintech at as many places as I could, money stored in a bank? That's a solved problem. And so the question becomes, can this fintech support my credit needs? Because that, to many degrees, is the last piece of the puzzle here from a product completeness perspective, right? And I think what's particularly interesting about this move towards credit products is credit products have natural alignment to trust building. This is a very clear expression of trust between two parties. You are going to trust me that I'm going to pay my bill. I am going to trust you that you are going to provide me with sufficient limits and maybe, some grace outside of the policy if things in my personal life go awry for a couple of months or something. And so I think it's a really interesting way to get to that next level of trust building with customers. And one of the most interesting things that I have seen in switching to this Wealthsimple card is I went out at lunch one day and I impromptu went in to buy something at Harry Rosen's. Obviously, it was going to cost more than $250. I didn't have my wallet on me. And I went up to the till and I said, oh, geez, I said, you got to split this into, 3 transactions. And they were like, nah, just try it. And I said, well, I know it's not going to work. The limit's $250. The tab limit's $250. I know it's not going to work. And they're like, sometimes it works. People come in here with American cards and they work and so on. I said, okay, fine. And I tapped it and it worked. And then I went to some friends at Wealthsimple and I said, was this intentional? And they were like, yep. The tap limit on this card is high. I think it could be higher. While everybody else is trying to ship me a metal card, Wealthsimple is trying to make my card obsolete. And I can tell you that I think about it multiple times a day. Oh, do I have my wallet? Do I need my wallet? Where am I going? Am I going to dinner? That's going to be more than $250. I need my wallet. They're solving a real problem for me. And in doing so, we're establishing a different level of trust. And they're doing something that the banks are not going to do for some time here. And many people will listen to this and think, wow, that's silly. That's not a big deal. I'm telling you, this is a very, very big deal.
Very cool.
Yeah, I love it. The one other thing that I just wanted to circle back to, because I have seen you diagram this a number of times, is just this decoupling of the card product, which is a piece of hardware that allows you to route transactions and then provide decisions back to the network. And whatever is happening in the background that is making that approve decline decision, whether it's risk rules or where is the money coming from? When was that credit issued? Can you just talk about that a bit? Because I think you love this topic.
Yeah, no, for sure. So yeah, I mean, you're totally right. Just in terms of the functional use and makeup of the card versus the actual credit portion. And so they really actually leverage 2 different sets of discrete, I guess, technologies, whether you're building it in-house or you're partnering with a variety of different players. On the card, quite simply, you're obviously still going to need your sponsor bank. You are going to, or you're going to self-issue, but I think most will go the sponsor bank.
We should talk about that.
Route.
We should talk about that at some point in the future, is like direct issuance, because this is a really interesting piece of the Canadian market. But I won't distract you.
Yeah. And then you're going to have your card processor and potentially your manufacturer and fulfillment house. But really, I think that's the more traditional path. On the actual credit side of things, you need to adjudicate, and so you're going to need a loan decision engine or a loan origination system. Where you're going to manage your rules, and within where you manage that rules, you actually want to access the data that you need to make that decision. So as you're designing your credit policy, you're going to start to qualify what types of data you might have internally to be able to leverage, as well as those external sources of data. And there's some fantastic technologies out there that offer a marketplace style of service that plug into all of the different fraud, bank, data providers, plug and play for you to be able to start ingesting data on your customers with their consent. So that's the loan origination system. A customer wants to move forward with a loan. Now you need to manage that loan. So you're going to need a loan management system. an LMS. And this is really the system that has been programmed or configured to represent your credit policy. It's calculating your interest. It's having payments applied against it. It is, running back and rewriting rules if a payment gets, reversed or something happens to that loan. Collections agents are integrated with it through either kind of like an internal system or an extension of one of these platforms. But it's a core system that you can rely on to be the source of truth for the loans that you're currently in the portfolio and being managed. And then, maybe not lastly, I think if you're going to be reporting on credit, you need a relationship with one or more of the bureaus to be reporting that good payment history. But where I was actually going to go is a credit facility partner. That may or may not be your sponsor bank on a credit card. They're exclusive. You can bring one or more credit facility partners to the table to actually fund those loans. You can do really unique structures where you're funding part of it and then you have a partner for the rest. There's a whole bunch of different models and businesses that are out there for the sole purpose of funding, credit products. And so that's, I guess, the unique side that's completely separate from the card that needs to be considered as you're going down the path of offering credit products, whether those are standalone credit products or those are credit products that are kind of built in seamlessly with a card product.
Yeah, that's exactly what I was trying to get to, is the idea that, a credit card is not a tightly coupled hardware product to process transactions and, credit decisioning. It is at the bank, but this is the opportunity, right? Is these things are naturally decoupled, and the world is moving to a place where we will not have physical cards and where we are tokenizing cards such that you can have a one card to rule them all experience as a card holder out in the world. And all of the things that you need to do to originate credit and manage loans can be done in bite-sized increments. This is not about asking people necessarily to switch to your product. They already have a product that is roughly equivalent and works. The story of fintech has been one bite at a time. You don't go to somebody and say, hey, do you want to switch your bank today? Nobody thought about switching their bank this morning. Nobody wants to do that. It's scary. Scary because of how much time it would take you to do it. But if you just deliver me a good experience, one bite at a time, I will continue to serve myself at that buffet. And eventually, like the situation that I'm in, I'm all in on fintech. The only thing that is left with a regulated financial institution, the traditional bank, is my mortgage. And that's going to go too. So one bite at a time. I like that you just broke down the components of the infrastructure components and really the capabilities of credit and lending inside of a fintech. It might be interesting for us to take those one by one and invite some of the experts that we know to talk about those. Wouldn't it be amazing to have somebody from one of the LMS providers to come on and just talk about that category of products? And obviously Brent from Payson can talk for days about adjudication and line assignments and really just how you use the data.
Yeah.
So I think there's interesting opportunity for us to maybe invite some others into that conversation and give people a bit of a roadmap for how to do this.
Yeah. And I mean, I think you really touched on a good point. Without breaking things down into these components, we've been doing for, the last while now with some of our clients, it's when you start to break it down into these individual functional pieces, I really think that is where the innovation is born. Because when you just sit there and show up and say, okay, let's launch a credit card. Well, that already means something very, very specific to almost everybody that you say it to, right? But in reality, when you separate card from credit in your mind, and then you start breaking down each of those individually, you actually start to recognize that there is some flexibility in the way that things are built. And I really think that that is where, the next generation of like fintech innovators are going to start to flex their muscles and come up with creative ideas to a product that is, very kind of like woven into a customer's mind in Canada, and start surprising them with different types of solutions that can meet multiple needs. So, that breaking down of how things work is like critical element in the future of fintech.
Yeah, without question. Without question. Well, I'm gonna go. I gotta walk down the street and get headshots. So
Nice.
I'm about online. I'm about to go from like 30 years old to 42 years old.
Okay, listen, send me that filter after you know which one you're using. I'm going to need that on mine as well.
No, this is gonna be HD. This is gonna be raw.
Awesome.
Okay, well, we will, I guess, we'll pick it up tomorrow. You and I still have some planning to do for Money 2020, which I'm pretty excited about because
It's my Super Bowl.
it's your Super Bowl. And for me, it's an opportunity to like really live at that intersection of crypto and fintech that I love. And I think crypto is going to be a pretty big theme this year. So
Yeah. Good.
until next time.
Okay, talk to you later.
All right, bud. See ya.